Welcome back to Midcap Radar. Well, Prudent Corporate Advisory reported a decent set of Q2 numbers. The company saw its revenue rise nearly 15%, while total expenses grew 14% on a sequential basis. To discuss this and more, we have Sanjay Shah, the Chairman and Managing Director at Prudent Corporate Advisory Services, joining us now. Good afternoon, Mr. Shah. Thank you so much for joining us. Wish you and your team a very happy Diwali. First up, give us a sense of, number one, what percentage of your earnings are actually linked to the equity market rally? And also, with the last couple of weeks, the kind of correction that we are seeing in the markets, have you seen any impact on flows on SIPs? And what would be the resultant impact on revenues, if any?
Well, thank you for inviting us, and just convey my happy Diwali wishes to entire team of CNBC and all the viewers. So I think you are definitely very, very bang on as far as my earnings are concerned. So we are representing purely the India's retail investor sentiment. And if you look at last 1 year, if my AUM has gone up by almost 58%, 44% has came by way of mark-to-market gain. So significant rally has came in the AUM due to stock market performance, and that is the reason. If you look at YOY, our AUM has gone up by 55% and my profit after tax has gone up by 69%. So I think that has been impacting significantly. Coming to your point regarding the retail sentiment, I think probably if I just give you the number, in the month of September, we ended the quarter with a 1,07,000 crore of AUM. And in this month till date, I think the market has gone down by 7.5%. However, yesterday my AUM was at 1,04,000 crore. So just trying to communicate that overall sentiment are conducive. Money is not moving out. I think the SIP book also growing strength on strength. And if you look at, I think because of entire AUM, which is mix of hybrid, balance advantage, multi-asset allocations, large cap and the mid cap, overall impact on the mutual fund portfolio at our end is about 3.5-4%. So overall, retail is very, very strong and the net numbers are very, very positive in the current month. So there is no impact on the retail side. Confidence are significantly better. And if I extrapolate this for the full year, if you do not see significant downside from here on, and if market remain in this range bound for some more point of time, I think retail will still remain committed as far as SIPs are concerned, because in case of SIP, with every fall as new money is coming in for the investments, I think retail is not significantly impacted.
Okay. It'll be interesting to see the October number, because September saw that SIP number about 24,000 crore rupees. So very important time to understand whether the retail culture continues or not. Mr. Shah, your AMC yields are coming under pressure due to telescopic pricing. Is there any cut in commissions paid by them to you? Is there an impact on revenue or margins, if any? If you can explain this to us.
Yeah, so if you look at, I think the last couple of years, the mark-to-market really has been very, very significant. And because as the AUM goes up, because of SEBI's pricing structure, with every 5,000 crore AUM going up, the TR goes down. And after a long period of time, I think the largest AMC of the country, which is the HDFC, has transferred the price, the TR cut to the distributors, and we are also the one who has been impacted. However, if I tell you about the numbers, it was the Nippon One scheme and the HDFC who has reduced the price on the overall book. But if I'll tell you about the 1 lakh crore of my AUM, if I let us assume earn with a 1% yield 1,000 crore, the cut which is going to impact on my top line is roughly about 6 crore. So I think less than half a basis point impact has came as far as my top line is concerned. We are one of the largest B2B player of the country. So if I earn, let's say 100 rupees, I share 65 to 70 rupees to my distributors. So we also passed on 65 to 70% to our distributors. So our impact on the bottom line would be limited to about less than 2 basis point.
Okay.
Okay. So at the end of Q1, you had actually told that you expect to maintain a similar kind of margin, although on an absolute basis margins may change as the commissions come down. Would you like to elaborate on that? At the end of Q2, where do you stand?
So actually, in the Q1, my top line was about 91, 92 basis point. In the Q2 also, I'm in the similar range, mainly because if you look at in the second quarter, or let's say about the entire first half, my net sales was about 12, my gross sales was about 12 to 13,000 crore, which is 12% of my current book. And if you look at post 2019 when entire the pricing structure got revised. If you remember 2019 ke pehle, we used to earn upfront as well as trail, and then we moved to an entire trail model. So currently my new business gives me a 1 or 2 basis point higher yield, and because my new business volume is significantly higher, my yield has remained protected in the entire first half.
Okay, so new business gives 1 to 2 basis points higher yield, and new business is growing faster, or at least it's a bigger contributor overall to yields. I just want to understand what's the differential between the commissions you make on distribution of, say, mutual fund products versus insurance products. Where do you see more margin?
Because I think both has to be looked at separately, because mutual fund is entirely based on the trail, where lifelong you continue to earn 1%, while the insurance is a one-time revenue linked to the premium whenever you mobilize. So definitely the insurance revenue goes into a significantly higher percentage. Just for example, if you do something, let's say the life insurance non-par business, which is the kind of investment product only, you earn in the range of 40 to 50%, which is linked to the premium. While in case of mutual fund, you earn 1%, but you continue to earn 1% for the lifelong. So both are non-comparable, ma'am.
Okay, Mr. Shah, give us a sense of the revenue mix. Now, going forward, how do you see the mutual fund business growing, the non-mutual fund business, and especially insurance off a low base is growing very strongly? So how do you see the revenue mix pan out, and any growth rates you could forecast for us?
So frankly, we do not give any forward guidance. However, as far as mutual fund is concerned, there is one very strong factor as far as Prudent is concerned. So we have a very strong SIP book. So if you look at, I think the month of September, we ended the SIP book with 870 crore monthly collection. And we have about 115 crore of STP, which are money moved from liquid fund to equity. So roughly about 1,000 crore. So if you annualize this to 12,000 crore divided by total AUM, we have about 12% collection comes by of SIP, and we assume that 10 se 12% should come by way of mark to market. So on a longer term, at least 3 to 5 year horizon, you can easily project that the equity AUM should grow in the range of 20 to 22%. So I think the mutual fund itself is likely to grow at a better pace. However, in my overall revenue basket, insurance is significantly lower. I'll just give you the number. We have 31,000 mutual fund distributors. We have converted 12,450 people as point of sales. So still large number of people are yet to be converted. Plus people who already became point of sales are still, everybody is not productive. So hardly about 4,000, 5,000 people gives me the business. So you are very, very true. Insurance on a lower base, we have a very strong possibility that it can definitely grow at 25, 30%. But mutual fund will also continue to grow at 20, 22%. So overall, currently mutual fund is roughly about 78% and non-mutual fund products are 22%. We believe in next 2-3 years, mutual fund will go below 75 and rest all product will probably in the range of 25 to 28%.
All right, so that is the growth rates you are expecting for both insurance and mutual fund business. You know, you spoke about additional product offerings as well in Q1, be it ULIPs, be it the Fund Bazaar platform and the other aspects of the business as well. By when do you launch it? And are you seeing interest in ULIPs? Because that is not considered as an investment option so much generally. What makes you confident about launching this product?
So normally we never used to give ULIP because we are very strong in the mutual fund side, and we always believe that ULIP is nothing but the competitive product to the mutual fund. However, in case of insurance, now the insurance companies are also moving towards trail concept in the ULIP, where the upfront cost will be very, very low, and hence it becomes on the revenue side more or less similar product. At the expenditure side also they both are similar. So we started adopting that product into our product basket from the second quarter. Yet we are yet to see a strong traction. And another important thing is, if you look at the structure of the Prudent, we have 100% subsidiary called Gendex, which is the insurance broker. We also became corporate agent in the Prudent Corporate, which is the 100% hold of the main parent company. And we have a very strong technological platform called Fund Bazaar. And we wanted to provide all the product to my mutual fund investors under one login. So there we started providing the ULIP. So we believe the traction is yet to come. The reason for adoption is that on the cost side and the revenue side, both are becoming now parallel.
Thank you so much, Mr. Shah, for joining us and explaining to us in depth about Q2, the way forward, and also the business going forward. Let's now slip into a short break. We'll get you more on the markets and stock specific action on the other side. Stay tuned.